Hey everyone, and welcome back to Investing Talk Podcast. We're going to be tackling a company that I think is on a lot of people's radars right now, Boeing, ticker symbol BA. And trust me, it's not just because of those, iconic airplanes. Boeing is at a crossroads. They're facing some pretty critical decisions that could really make or break their future. So we're going to dive into their latest earnings, the technical charts, and all the news that's swirling around them right now to help, you make sense of this complex investment landscape.
Yeah, you hit the nail on the head there. Boeing is at a pivotal point, and to make things even more interesting, they're navigating all of this against a pretty turbulent market backdrop. Just today, both the S&P 500 and the Dow Jones took a pretty significant hit, dropping over 1.5% each. Inflation worries and fears of a slowing economy are definitely spooking investors, and that has a ripple effect on, every company, especially one like Boeing that's already facing some internal challenges.
Right, it's like they're trying to fly through a storm with a few engine warnings flashing. So let's get specific. Boeing closed today at $177.33, down 2.1%. Now, some of that might be due to the overall market dip, but let's be honest, Boeing has, its own baggage right now. So what are the one or two key EY things going on within the company that are making investors nervous?
Well, their recent Q4 2024 earnings report definitely didn't inspire a ton of confidence. They're projecting a loss of $5.46 per share, which is partly due to the labor strikes they had to deal with and some charges in their defense segment. Those are serious headwinds. Now, Boeing IS working to stabilize their supply chain and ramp up production on some of their key aircraft like the 737. But, and this is a big but, they're still struggling with those pesky delivery delays. That's something investors are watching very, very closely.
See, this is what I find fascinating. Because while the headlines are all screaming trouble, I'm seeing some technical analysts on formerly Twitter, suggesting that Boeing's stock might actually be stabilizing, maybe even bottoming out. And some of them are pointing to patterns like that massive 6-month base we saw back in 2023. What exactly does that mean, and should investors read anything into it?
That's a great question, and it shows how technical analysis can sometimes give us a different perspective on things. That 6-month base essentially means that the stock was trading within a relatively tight range for 6 months, sort of building a foundation. And some analysts believe that kind of pattern can signal accumulation, investors kind of quietly buying up the stock. And it could precede a breakout. Now, whether that happens again, is anyone's guess, but it is something to keep in mind as we look at the charts.
Okay, so let's break down some of those technical indicators. First up, we've got the moving averages. Remind us what those are and what they're telling us about Boeing right now.
Sure. In simple terms, moving averages smooth out price fluctuations over a period of time. We often look at the 50-day and 200-day moving averages. Currently, Boeing is trading below both of these. That's usually a bearish signal. It suggests a downtrend. It doesn't mean the stock can't go up. But it does tell us that, technically speaking, the bears are in control.
All right, and then there's that other indicator that you mentioned earlier, the RSI, or Relative Strength Index. Without getting too deep into the weeds, what's the RSI saying about Boeing?
Well, the RSI is basically a momentum oscillator. That measures the magnitude of recent price changes to evaluate overbought or oversold conditions in the price of a stock or other asset. It's currently near what we call oversold territory. Now, that doesn't mean it's an automatic buy signal, but it does suggest that the selling pressure might be easing up a bit.
So maybe a little glimmer of hope there.
Possibly. But we need to be cautious. We need to look at other factors as well. For example, we need to consider support and resistance levels. Right now, $175 seems to be acting as a key support level. That's where the stock has bounced back from a few times recently. But on the flip side, yesterday's closing price around $180, and then that $185 to $190 range, those are acting as resistance levels, like hurdles that the stock needs to clear for the bulls to really take charge.
Got it. So it's kind of like a tug of war between the buyers and sellers at those key levels. And speaking of tug of war, we can't ignore the elephant in the room. The political and regulatory risks swirling around Boeing. I mean, former President Trump has been pretty vocal about his criticisms of the Air Force One program, not to mention his stance on tariffs. It's hard to ignore that kind of commentary, especially coming from someone who used to, occupy the Oval Office.
Absolutely. Those political risks can definitely spook investors, and we're seeing that play out in the market's reaction to Trump's pronouncements. But what's interesting is that this all ties into a much broader theme that's been hanging over Boeing's head for years now: safety and regulatory scrutiny.
Right. The FAA is watching them like a hawk. especially after those tragic incidents with the 737 MAX.
Exactly, and rightfully so. Just recently, there was that incident involving a Golan Haas Area 737 MAX colliding with an airport vehicle. Thankfully, no one was seriously injured, but it just highlights the fact that safety concerns are still a major headwind for Boeing. They need to regain the public's trust, and that's going to take time and a lot of effort.
And then we have these mixed signals coming from Boeing itself. On one hand, they're laying off workers in their space program, which could be interpreted as a sign of weakness. But on the other hand, they're also pursuing new contracts in the defense sector, which could be a sign of growth. How do you reconcile those seemingly conflicting moves?
It's a bit of a puzzle, isn't it? Some analysts see it as a strategic shift, with Boeing focusing on their core competencies and trying to shed less profitable ventures. Others see it as a sign of desperation, with the company grasping at any opportunity to stay afloat. Only time will tell which interpretation is correct. But what's clear is that Boeing is trying to adapt to a chiming landscape.
So we've covered a lot of ground here. We've got earnings, we've got technical analysis, and we've got this, ever-present political and regulatory landscape. But for someone who is sitting at home right now, thinking, should I buy Boeing? Should I sell it? Or should I just stay away entirely? What's the bottom line? What are the key takeaways that they should be considering?
That's the million-dollar question, and unfortunately there's no easy answer, but let's try to break it down into a few possible scenarios. First, you've got the long-term recovery play. This is for the investor who believes, Boeing can weather the storm and ultimately emerge stronger. They're bidding on the aerospace industry's long-term growth potential and Boeing's ability to capitalize on it. Their strategy might involve buying BA shares outright, or perhaps looking at long-dated call options. The risk here, of course, is that a prolonged economic downturn or some major geopolitical event could derail that recovery.
Okay, so that's the, betting on a comeback scenario. But what if someone's thinking, hey, this stock is really volatile right now. Maybe I can make some quick profits just by, riding those waves. Is there a strategy for that kind of investor?
Absolutely. That's where options trading comes into play. And to be clear, option trading is not for the faint of heart. It involves a higher level of risk, but it can also offer, higher potential rewards. Savvy investors might try to capitalize on Boeing price swings by selling cash-secured puts or using strategies like bull call spreads. The key here is to have a clear understanding of how options work and to manage your risk carefully.
So that's for the folks who like a little bit of an adrenaline rush with their investments. But what about the more cautious investor, someone who acknowledges the risks in Boeing's, commercial aviation side, but also sees potential in their defense contracts? What would you suggest for them?
That's where a strategy I call the defense sector hedge might make sense. This approach acknowledges that Boeing's defense segment has some question marks, but it tries to balance that risk by pairing Boeing with a stronger defense stock, such as Lockheed Martin, ticker symbol LMT. The idea is to capitalize on the potential upside of Boeing's aerospace recovery while also hedging against any uncertainties in their defense segment.
So it's like a diversification play, but within a specific sector. You're not putting all your eggs in one basket, so to speak. But wouldn't that also limit your potential gains? Like if Boeing takes off, you're only capturing part of that growth.
That's true. There's always a trade-off between risk and reward. This approach is more about mitigating potential losses while still giving yourself some exposure to Boeing's potential upside.
It's fascinating how a single company can spark so many different investment strategies. And that's what makes Boeing such a compelling case study right now. It's a company at a crossroads, grappling with earnings setbacks, supply chain issues, political headwinds, and the constant pressure of regulatory oversight. But at the same time, there are those glimmers of hope, signs of stabilization in the stock, the potential for a turnaround, and even the chance to, capitalize on that volatility. It's a lot to process.
It definitely is, and that's why it's so crucial for investors to do their due diligence, understand both the fundamentals and the technicals, and be prepared for any scenario.
And speaking of understanding different scenarios, I'd love to hear from our listeners. What are your thoughts on Boeing? What stood out to you in our analysis today? Are you bullish, bearish, or somewhere in between? Head over to our website or find us on X, formerly known as Twitter, to share your insights. We're always eager to hear different perspectives.
Yeah, we learn from our listeners just as much as they learn from us, so don't be shy. Jump into the conversation. Investing is a journey, and we're all in this together.
And that brings us to the end of our Boeing breakdown. But before we officially sign off, I want to leave you with one final thought. If Boeing manages to navigate all of these challenges and really return to its former glory, what impact could that have on the entire aerospace industry? Could it spark a wave of innovation? Or could it lead to even more consolidation as competitors struggle to keep up? It's a question worth pondering as we watch this iconic company, fight to regain its wings.
Yeah, that's a fantastic point. Boeing's fate is really intertwined with the future of the aerospace industry as a whole. If they succeed, it could really signal a new era of growth and technological advancement. But if they falter, it could create this ripple effect throughout the industry. Consequences we can only, begin to imagine.
Well, on that note, I think we've landed our Boeing analysis for today. We've covered a lot of ground, from earnings and technical indicators to political risks and potential investment strategies. But as always, the real learning continues after you hit that stop button.
Exactly. We've given you the tools and the insights, but now it's up to you to dig deeper, do your own research, and make informed decisions.
And hey, if you found this episode helpful, we'd love for you to subscribe to Investing Talk Podcast, share it with your fellow investors, and leave us a comment with your thoughts on Boeing or any other company you'd like us to analyze. We're all in this together, trying to navigate the complex world of investing and make smart choices.
And remember, every market downturn, every earnings surprise, every bit of news, it's all part of the investing journey. It's what keeps things interesting, right?
Absolutely. So until next time, when we'll be back with another deep dive into a different corner of the market. Keep those questions coming, keep learning, and happy investing, everyone.